Ladies and gentlemen, let's now welcome our very dear friend, Mr. Mayuresh Joshi, Director for Research at William O'Neill Securities. And we are welcoming him with a very nice green tick on the pre-open market. Nifty is up 65, Bank Nifty is settled 125 points higher. And there's a chance that the Sensex will open 250 points higher. A very good morning to you, Mayuresh, and a very warm welcome. I knew that you would have a clean shave now, that the market needs a lot of help and a lot of support. For those who've been with us for a longer period of time, it is Mayuresh's clean look that was keeping the bull market alive. Then he grew a beard and you know all that happened after that. So the clean shave is back. Good morning, Mayuresh. Your views on the market and what do you think of Mr. Trump's latest tantrum?
Morning, Shel sir. Always a pleasure to be on your show. Two things. As you and Siddharth were just discussing, I think there are a lot of ifs and buts, and I think it will all come down to the negotiation table. How hard can India negotiate with the US? And this is what Trump wants. I think he wants each and every nation to probably come back to him and negotiate pretty hard, so that the US is probably at a better advantage than the rest of the pack. So therefore, I think these comments, statements will keep on happening. The rhetoric will keep on happening over the next few weeks, the next few months, if I would say. And that would keep global markets volatile for two reasons. One, I think in terms of expectations of what may or may not happen, global GDP might come under some sort of a pump. And the second aspect in terms of emerging economies, you've already seen what has happened to a lot of currencies across the emerging pack. If they continue to depreciate and there is a devaluation war that happens between these countries to maintain their export competitiveness as far as the US is concerned, and the outflows that we have probably seen, that can probably have an impact in terms of trade and current accounts.
Mayuresh, most important things first. Happy Valentine's Day. What's the plan for the evening?
Happy Valentine's Day to you as well. No, I'm off to Nasik in some time. So we've got a function out there. So I think the whole family might be celebrating Valentine's Day on the way to Nasik.
Okay. Fine. I'll take the debriefing on a personal phone call to you. But tell me more interesting things about the market. Now, what is the research team at William O'Neill looking at in terms of mids and smalls? We've had this massive controversy between marquee fund managers and all that brouhaha that's happening in the mutual fund space. Tell us, if you remove all that is unnecessary, what are a couple of stocks that make sense at this point of time?
So, Shelson, I think again, with all that is happening across the globe, I think it's more important to focus on domestic-oriented, domestic-focused sectors, because they will be least impacted. And that's been our call for the last few months, even before Trump resumed office, because the rhetoric was always going to be there. Obviously, I think a couple of sectors within the domestic pack, assuming expectations of strong earnings growth continuing. Agrochemicals as a space, Shelser still looks very strong and attractive to us on 2-3 reasons. One, I think you've seen a very good Rabi harvest this time around. So the expectations of a good Rabi output is something that the market probably believes should come through. Secondly, there are La Nina conditions which are evolving, which means there is expectations of bountiful monsoons expected, the monsoon expected to come, which means the Kharif season can be very good as well. And if monsoons are bountiful, with reservoir level, moisture levels expected to better, the next Rabi season can be equally good as well. So now you're looking at a scenario where agrochemicals or a lot of these rural focused themes might actually continue doing well in terms of earnings, where the earnings degrowth is happening for a lot of sectors. And the expectation is that with the tax cut, consumption might pick up as we head into the first half. This part of the pocket, agrochemicals, rural, discretionary, will continue doing well based on the logic that we probably got. Coromandel International, to name a stock, particularly something that we like at MarketSmith India. Our take is that the market leadership that it has got, the expectation of strong volumes to grow, the expectation in terms of stable farm gate prices, input costs, specifically phosphoric and sulfuric acid, have remained extremely stable. And therefore, this is one stock where the EPS rating, RS rating, and strategic holding is very strong. The other space, Shelter, is hospitals. And again, our take is that they remain absolutely immune to what is happening to the globe, with expectations in terms of their asset-light model, expectation in terms of the debt deleveraging that is happening on their balance sheet. A large part of the core operating parameters and dynamics, including the bed size which is going up, the asset-light model, which means the debt-equity ratios and the debt-EBITDA levels going down, and core parameters like average revenue per operating bed and average length of stay actually improving, means that everything should also remain stable for the space. So Krishna Institute of Medical Sciences, KIMS, is somewhere where the results have been decent. They have been growing their bed space over the last few quarters, and that should fructify in terms of better numbers with better volumes of occupation rates, improving forward as well.
Okay, fine. So the agro theme is upon us. You can see a lot of action happening in Coromandel International, in particular UPL. UPL has been one of those disappointing stocks over the last 4.5 years. It is now showing signs of life as far as charts are concerned. And there is a broader theme that Mayuresh feels would make sense. Domestics. And within that, Mayuresh, how would you watch hospital stocks? They have nothing to do with tariffs. They have nothing to do with the supply chain issues that the world might grapple over the next 2 or 3 years. And of course, earnings have been fantastic across the board. Any favorite that you have in the hospital space?
So that's what I just mentioned. Krishna Institute of Medical Sciences, KIMS, is something that looks attractive. I think it's matching all parameters that we see, Shal sir. Interestingly, it's I think a 100% rating on EPS, RS, institution holding as we see it at Translate, and they have delivered on numbers. And a large part of their capital expansion or bed expansion has happened in the last few quarters, which should start fructifying in better numbers as we go into the next few months.
Fair point. So hospitals is in place. Anything or any sector or any particular theme that you're avoiding with a barge pole in the market at this point of time, Mayuresh?
No, though specifically, I think a lot of sectors probably have run up quite significantly. So I think apart from these two sectors, I think banks is something selectively we've got on a focus. And my own belief is that specialty chemicals selectively might come back this financial year.
Yes, that's a fair assumption to make. I'll request the PCR to fire the two biggest ones of them. Keep a lookout on SRF, which recently hit a record high, is showing all signs of swinging back up into action. And of course, Naveen Fluorine, a fabulous set of third quarter earnings that came in about 2 or 3 days ago. And the stock is in very fine shape. Mayuresh, your opening comments on what you think the market is at the moment. This is a fairly mature start given what Mr. Trump said overnight.
No, absolutely. And again, I think let's realize that this is not just India specific, right? I think it's going to be global in nature. And therefore, I think it's not just India that he's targeting. It's the whole world that he probably wants to get on the negotiation table. So I think the street probably assumes and expects that. Having said that, I think a large part of the expectation pool is that with the tax cuts that have now got announced in the budget, the first quarter and the first half of the next financial year, you will see significant amount of accretion happening across a lot of the consumer discretionary elements as consumption patterns start improving. And therefore, I think the lag that was happening as far as India Inc. was concerned in terms of private capex, there is sufficient and ample hope that as consumption gets driven up with all these tax cuts, investment comes back roaring in the second half, providing ample support to GDP as well. So fingers crossed in terms of India's relative outperformance to the rest of the world.
Net FII sales in the month of January have exceeded the ones in 2024. That itself is a very, very painful strategy. Mayuresh, in your own experience, this talk about stopping SIPs, how do you react to it?
No, you should not. And in fact, if you probably look at all the crisis periods in the past as well. So let's go back to the 2008 fall, right? If you would have started your SIP just before the peak of that fall and continued holding on, your XIRR, which is effectively your net returns or the effective returns that you will make compounded over a periodicity of time, still far better, right? Again, 2010, 2014, before the COVID fall, you take numerous examples that you probably got. And in fact, I think SIPs are the best time during tough times like these because you can probably double down in terms of the number of units that the same amount can probably buy. And therefore, I think you should be continuing your SIPs. obviously, I think your horizon has to be longer. You cannot come into SIP saying that I want to be in the market for a year or two. Your horizon has to be longer for you to help compound the wealth that the market might do for you. Again, Shelter, I think what is probably happening is even on the DI front, I was just reading a few reports yesterday. They're sitting on 1,90,000 crores of cash, which is 5.5% of the total AUM. And this is just mutual funds that I'm talking about. If I add on the AIF part, the PMS part, the HNI, the Ultra HNI pool of cash they're sitting on, I think any major dip that comes into the market is going to get selectively protected.
We have a universe of about 200 investable stocks in the small cap and the mid cap space as defined by the SEBI breakup of market capitalization. Are you also in the camp which says that there is excessive overvaluation across the space and fund managers will do well to tell their marketing departments to please keep quiet for maybe 6, 8, 10 months and not get SIPs in? My fear is that if you stop a SIP and the rally starts in a flash, how will people put in money? It's very easy to say buy the dip after discontinuing your SIP. But what if it starts tomorrow morning and you have a discontinued SIP?
Again, Chelsea, I think historically saying nobody knows where the bottom is, right? Either for the markets or for a particular stock under consideration. It's all wishful thinking to find the bottom in markets. The only issue is that one probably must see the big macro picture and then look at the micro picture. And the macros are probably hazy as we speak. Obviously, I think one risk factor that is also that is largely not spoken about is what the Japanese central bank has done. So the Japanese central banker has steadily and silently increased rates by 25 bips. The expectation is that there might be a 50 bips hike over the period of the next few months, which is the periodicity of a year down the line. What this has really done is, if you probably look at the USD yen pair, which was around 156, around Jan 20, Jan 25, in a matter of a few weeks, a couple of weeks, that has come down to 150. If there are further rate hikes, that might come down to 140. And if that happens, the 2-year yield, which stands at 0.8, might move about 1. And what this really translates is emerging currencies coming under further pressure on top of what Trump is probably doing. And therefore, I think emerging markets and the NASDAQ index in particular can come under some sort of serious pressure if that probably happens. So there are those macro headwinds which will translate into global headwinds, which will come down onto the micro headwinds. And therefore, you need to be very, very selective. So we are very, very cautious at this juncture. We are not rushing in. And therefore, micro headwinds will play a part this year. One really needs to moderate the return expectations. I think what we've really seen, Shells, over the last 2 years is runaway valuations, runaway growth. The market hardly does that, and it comes back to mean revergence, which is probably doing at this stage.
One good thing, Mayuresh, you've done is to shave off your beard, and that possibly should keep a support at 23,000 actually. Your thoughts on NBFCs and domestic pharma? Pharma you've spoken about a bit earlier, but how about NBFCs? I see a lot of activity happening on Cholamandalam Investment, Shriram Finance. These were beaten down a bit, but great quality companies. Look at Muthoot Finance at a record high in this kind of a market. What would you comment on NBFCs, and what would be your top pick, Mayuresh, at William O'Neill?
You need to be selective, I think, 2-3 reasons. First, from a macro perspective, I think when you're looking at the space as a whole, one really must now understand with what is happening with the inflationary data points across the globe, the Fed comments as well. Interest rate cycle is going to get deferred significantly in terms of timelines. And therefore, I think a large part of the NBFC pool in terms of their borrowing mix is largely dependent on bank financing. So if the interest rate matrix does not come down, a large part of their cost of borrowings is still going to remain elevated. The second element obviously is in terms of the advances growth and which sectors would they probably advance to. I think a large part of the pocket pool that we've probably seen through in terms of a few microfinance companies as an example, which have gone through tremendous amount of stress. A few of the banks which have just recently received banking licenses within the NBFC space, they will reflect a large part of this pool as well. And therefore, I think where to selectively have their advances compound is going to be a huge question mark in front of them. Obviously, I think with the tax cuts that are coming through, with rural economy expected to pick up, the efficiency ratios and specifically the collection efficiencies are expected to pick up as we head into the first half. But again, I think the point is very simple. I think where the credit ratings are superior, where they are backed by strong corporate houses, where the expectations in terms of both these factors put together give them that capital adequacy comfort, specifically in terms of tier 1 ratios, that is where the balance sheet comfort might come from. And therefore, I think Bajaj Finance has largely been an underperformer over the last few years. That might actually stand to gain as we head into the next few quarters as well, because a large part of the expectations that I just spoke about is largely getting satisfied by what Bajaj Finance is expected to deliver as we get into the next few months.
But before we let Mayuresh go to celebrate Valentine's Day in top fashion, Mayuresh, a fancied microfinance stock in the coverage of William O'Neill Securities, if any?
So I think we are keeping our eyes and ears open. As I said, rural discretionary and rural economy is expected to come back for all the tailwinds that I just mentioned. And therefore, the next quarter might be tough. There is no two ways about it. There is hope that the first half, the recovery process might start for these companies and earnings should start bottoming out. And that's the hope. And if all the tailwinds that we are speaking about start getting translated for a large part of this universe, I think we are keeping our eyes and ears open, but no particular pick at this juncture. But the hope is that the first quarter of the next financial year will throw selective opportunities within the spaces.
Okay then, my friend, have a very nice evening. Between the three of us, Arunji is off the block. He's celebrated Valentine's Day a week in advance. My plans are hazy, but you are the only one, the youngest amongst us, who can really take it forward. Thank you, Mayuresh. Have a nice evening and enjoy your day.
Thank you so much. It's always a pleasure. Thank you, Arunji. A pleasure being on the show as well.
Thank you. Thank you.